All right, here we go. All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market about 90 minutes left here today, so we're kind of getting to some of the closing time. It's been an interesting day in the market. We talked about the moves this morning as they happened, and we had the U.S. President Trump tweet about China. We saw Chinese state media also come out and confirm what U.S. President Trump said. So it wasn't one-sided; it was viewed as two-sided. And then we get into the whole drama of, oh man, the Fed, is U.S. President Trump going to get rid of the Fed or not? And we see Larry Kudlow talking about it on CNBC and all of that, kind of drama. But again, that's drama. That's not actual news. That's stuff about 6 months ago, and so we really haven't seen it, affect the markets in a material way here today. And what we see is bullish, and what we saw trigger on the MarketVibe bullish a few weeks back, is just still bullish, and none of that is shifting here today. In fact, it's strengthening here on the day. If we take a look at something like the bullish percent index, here you can see it moving up just a little bit, here today. Nothing too crazy, nothing too unusual or abnormal. If we look at things like, small cap performance, right, which is one of the areas where we have been seeing some lag, one of the areas where, the bears had a little bit of control. If we come in and start to take a closer look at that here after, the move over the last week, you can see that ratio, or the performance ratio, is converging, meaning we're seeing less than a 2% differential between the S&P and small caps, which is a very neutral territory. And this is one that earlier this month, the spread between those was very large. And we talked about it. Yes, all the other metrics are bullish, but this one is, one that's still kind of squarely in the bears' hands. Bears have given it up. It's gone into a neutral position here today, and the Bears have lost control there of that performance ratio. So that's what's going on. We have the Fed here tomorrow. We have some earnings starting to upcome with a few smaller companies, but the drama, the news, all that's going to continue. But bottom line is, path of least resistance is still higher. The Bears, yep, they have an economic argument, they have an earnings argument, they have a fear argument, they have a lot of different arguments out there, but they absolutely need a catalyst. And well, today pretty much devoid of a bearish catalyst here for them. All right, so let's go out and take a look at the challenge, and we have to do something a little bit different here with it today. So let's go out and do it. No new triggers here this afternoon. We have some crossovers on stocks like Micron. In fact, here I'll show you some of them. But Micron here has a 3-7 crossover associated with it, but consolidation risk too high. I kind of like the setup personally, to go higher, but especially with some of the volumes that have come in, but not a signal here for the challenge today. We have Coca-Cola on the downside 3-7 cross, but not a signal here as well, as it's coming off of new high. So if you go out and take a look at a lot of the stocks in your watch list, you'll notice a lot of 3-7 crossover action. But in terms of the watch list for the challenge, we don't have any new signals coming into play here today. This morning, I mentioned that Twitter was kind of close, that it was getting close, but it has failed to hold and failed to materialize into a trigger here today. So we have two positions on the board. We have CSX. Let's go start with that one. We made that trade here this morning, and let's go see where it is at. But CSX looks like we're down about $100 on it here. The option value $263. So let's come in and we'll put that in $263. And so yeah, down about $90 here on it. We're nowhere close to our exit level on profit taking or on a exit here. 76.78 is where we'd have to be for an exit. We're still well more than $1 here away from that. So we'll hold that here into the close. And then we have Boeing. Boeing has had a decent day today, right? Up $16.77. And the option value right now, what, 22.40? So I'll just put that in here for reference sake. But we have almost $4,500 here into the position when it comes to Boeing. Now, what Boeing is doing here is it's trading, as we can even see with the 20-minute delay. But the stock price on Boeing is trading above its profit level, that 2 ATR range. And you'll continue to hear me say, hey, you know what? I don't expect any trade to go and make this type of move, a 2 ATR move, the day after we enter. I have that I do not expect. I'll never expect it. But it's sure nice when it happens, and so we'll take it. Now, this isn't something where I can go out and sell 40% of the position and hold the other 60%, because I have two options, right? I could hold one contract and, we'd make $100 per dollar move, or lose $100, per dollar move down. But in this case, I'm going to actually go out and change, sell the entire position and actually buy in to a new position here with Boeing. So let's go do it. All right, let's go do it here. And looks like 22.15, 22.45, the bid, the ask there. I'm just going to do a market order. And I know you're not supposed to do them, but I did it. 230 is my exit price. All right, so I'm out of Boeing here at 230, and I'm going to get back in. But let me make sure the alert goes out here for it. So we'll close that. Sorry, short-term memory loss. Let me find my fill price again, 22.30. There we go. All right, so we sold two at 22.30. Not too bad the day after a 10.75 entry. Definitely will take that. Let me just verify the alert went out. And we'll go out and make the next one. Boom, there we go. The alert is out. And so now I'm going to go out here, and that was what, $4,500, right? In fact, let me get the proper price into our spreadsheet here. 22.30, and it is out. So exit date 6:18 p.m. Okay, and closed. So now I want to take about 60% of this cash value here, which is what, 0.6 times, times the cash out value there. So it's about 2,600, and I want to put that into, the Boeing options again, right? And basically what I'm doing is I'm just moving down a few strike prices, and I want to go to the closest at the money. So I'm just going to do two contracts of the 370 strike here. I just do two of them, and that'll put about 60% of the cash that we had, in it, and can go. So let's click on go, and it filled me at 1275. So filled me at 1275 there on those two contracts on the 370 strike. So I'll slow this down here in a moment. Let me make sure the alert goes out, and then we will go in and fill out the spreadsheet here. So 1275 was the fill price there on two contracts, and on the strike price of the 19th of July. 19th of July, 370 calls. Okay. Boom, that alert is out. Good to go. So let's come in and fill out our spreadsheet here, because the trade is essentially, the same trade here, but a few things change. Okay. $371.50 is the current price of the stock. That's one of the things that changes here with it. The other thing that changes here with it today is the average true range. It's 845. Okay, so we have to adjust that. You'll notice the average true range has increased here, which is natural when you get this type of a move. So what that's going to do is it's going to change our stock exit and profit levels for these other two contracts. So 363 is going to be our stop level. 388 is going to be our profit level. Okay, now we're going to put the exit dates, right? So the auto exit date is going to be three days from right now. So the 21st, so 6:21 p.m., so Friday afternoon. And the auto exit date for a green trade that hasn't hit the price target is going to be the 25th, so 6:25 p.m. And there we go. Okay. Now we did two contracts. Our fill price was $12.75. Okay. And the 370 call. So essentially what have we done? We've just rolled up the position, right? Taken a little cash out here of the position and running with it. Okay. So 1275. There we go. That'll get our cash in. So we're down to 2,500. Basically, we've gone from 4,500 cash to 2,500 cash there on the position, and that is it. Okay. So currently between CSX and Boeing, we have about 5,000 cash in play. The challenge gains so far have been 9,200, so almost to that 10K mark of gains. Verizon would have been stupid this morning. Maybe we would be there. Okay, I'll stop talking about Verizon. And then the challenge value, if we include the original 3,000 that was removed, we're up over 12,000. So we've hit our second double, right? We've hit our second double. That's what we want, and puts us on pace for the 100K by September. So that's what I am looking for. Okay. You'll notice on the spreadsheet, whenever there's a like GLD back-to-back with different entry dates, basically what has happened is the trade has either been trimmed or split, or something has happened to where we've adjusted to the profit levels, right? And you'll notice we've had to do that now on 3 trades. So out of 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 10 trades, we've only had 3 that we've had to adjust at the profit level. So we're not really running at, we're not having great success of seeing, trade after trade hitting their profit levels. But, we're building in the gains at the proper pace. And, on a good roll here. Okay. So that's the Boeing adjustment. I know I kind of went through that a little bit fast if you're brand new. If you've been running here with us, that was probably a little too slow for you. But, we've essentially rolled the position and, have a little more exposure than what we had yesterday at this time. But we essentially trimmed out the gains, today's gains is pretty much what we've done. Okay. Alrighty, so that's Boeing, Boeing and CSX, and then no new signals to go out and trade here. Okay. Thanks for hopping on. Tomorrow there's a lot going on. There's a lot that's happening, especially with the Fed. Tomorrow morning, I'll talk about some of my expectations for the Fed, what I think the market's looking for, what I think the market's not looking for. That could cause a little bit of hubbub. But when it comes to the challenge, none of that's going to matter. It's all going to come down to signal, execute, go. And so I'll talk about some of the noise and how that's going to affect things and, what could happen. But none of that's really going to be reflected in how the challenge operates and how the challenge moves and the decisions that are made here for the challenge. And so it's not going to be something where I look and go, oh, the Fed's coming. Should I trim a position? Or the Fed's coming. Should I avoid a position? None of that's going to matter, which is one of the beauties of the automated challenge here is we just take all that noise toss it away, enjoy it for what it is. For those of you like me who enjoy some of that drama, and like kind of watching some of that stuff, we can just sit back and enjoy it rather than, sitting there and going, ooh, what's it all mean? And we can go out and react accordingly with our signals and see some nice gains sent our way. Again, thanks for being with us. Thanks for joining us at Trader Minute. Glad to have you. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.